MULN Automotive stock has been on a downward spiral lately, catching the attention of investors worldwide. If you've been keeping an eye on the market, you might have noticed a significant decline in MULN's stock price. And today, we're diving deep into the reasons behind this plunge. In this video, we're going to explore MULN's recent struggles, its intriguing share buyback program, and the looming shadow of potential bankruptcy risks. So, buckle up because we're about to uncover the story behind MULN Automotive's turbulent journey in the stock market. First, let's take a look at the recent performance of MULN stock. If you've been following the market, you'd know that the stock has been facing a challenging period. The value of MULN Automotive shares has dropped by a substantial 18.58%, showing a clear downward trend. But that's not all. Over the past 5 trading sessions, the stock experienced a notable decline of 36.32%, which is quite significant. To put things into perspective, the past month has been even harsher for MULN, with a staggering drop of 52.36% in stock price. And if that's not concerning enough, the past quarter saw a jaw-dropping decrease of 93.99%, raising some serious questions about the company's trajectory. These numbers paint a stark picture of MULN's recent struggles in the market. But as always, MULN has tried to make strategic moves to turn the tide. They've recently introduced a share repurchase program worth $25 million. Now, you might wonder what this means and why it matters to you. Well, companies often turn to share buybacks as a way to manage their stocks. The idea is simple. By buying back their own shares from the market, they can reduce the number of outstanding shares. This, in turn, can increase the value of each remaining share and potentially boost the company's earnings per share or EPS. It sounds like a smart move, right? However, there's a twist in MULN's case. Some analysts aren't entirely convinced. They're raising eyebrows and questioning whether MULN can sustain this buyback considering its ongoing financial challenges. It's a bold move, and it's got people talking. Can MULN pull it off? MULN Automotive has faced quite a financial uphill battle. Let's break down the numbers so it's clearer for you. In 2021, they incurred losses of $44 million. Fast forward to 2022, and those losses grew significantly to a whopping $740 million. And, if we consider the trailing 12 months, their losses expanded even further to a staggering $1 billion. Now, that's a pretty hefty sum, right? But there's more to this financial story. The company's cash and short-term investment balances have seen a considerable dip, going from over $107 million down to around $60 million. Now, you might find it surprising that MULN's cash balance actually exceeds its market capitalization. But here's the catch, even with this seemingly healthy cash position, it's not enough to cover the massive losses they've been incurring. If we broaden the scope and look at the electric vehicle industry as a whole, you'll realize that MULN Automotive isn't alone in this struggle. Let's consider some well-known players like Rivian, Lucid, and Polestar. They've been in the same boat, striving to turn a profit. It might surprise you that becoming profitable in the EV space isn't an overnight feat. Established brands have, in fact, taken a considerable amount of time before seeing positive numbers. So, while MULN's financial challenges are concerning, they're also part of a broader trend in the EV industry, where even the big names have had their uphill journeys to profitability. Moreover, there's a cloud of doubt hovering over MULN's share buyback strategy. Here's why it's raising eyebrows. Companies typically go for buybacks when they have extra funds or profits lying around. It's like a strategic move to make the most out of their financial position. But here's where it gets interesting. MULN Automotive seems to lack the excess cash or profits that are usually associated with share repurchase programs. That's a red flag right there. Adding to the skepticism is the company's history of reverse splits, which is a financial maneuver often used when a stock is struggling. It's a bit like a financial band-aid. And while MULN is trying to regain its footing, it's also grappling with NASDAQ listing requirements. But before we continue, we want to thank you for watching this far. Furthermore, MULN Automotive finds itself at the crossroads of potential bankruptcy. The reason? Well, it's got a cocktail of financial challenges brewing. The financial storm is intensifying, with cash balances dwindling and colossal losses mounting. Brace yourself for this. The company's upcoming financial results are expected to reveal yet another net loss, adding more fuel to the fire. But what about solutions? That's where things get tricky. MULN's options for money are rather limited. The tight debt market makes it hard to secure funds, and their stock price is plummeting, complicating matters further. This combination of factors paints a worrisome picture, hinting at the possibility of bankruptcy looming on the horizon. So again, as you assess the situation, it's clear that the road ahead for MULN Automotive stock price remains predominantly bearish despite the share repurchase program introduced as a potential game changer. While this move might have raised eyebrows and sparked conversations, the underlying financial hurdles seem to be overshadowing any immediate positive impact. It's essential to recognize the unique risks associated with a stock like MULN. You might have heard of meme stocks, those that capture the attention of social media and become a hot topic among retail investors. MULN, in its own right, has earned a place in this category. This popularity can lead to unexpected and rapid price swings, making shorting the stock a rather unpredictable endeavor. As tempting as it might seem, given the financial struggles, it's crucial to remember that meme stocks can defy traditional market norms. Throughout this analysis, a central theme emerges: the uncertainty surrounding MULN's share buyback and the cloud of potential bankruptcy risk. It's this uncertainty that investors and market watchers are trying to grapple with. As the financial results unfold and the stock charts ebb and flow, the question of whether MULN can indeed navigate these treacherous waters lingers. This story is one that continues to evolve, and the coming chapters might hold the answers that many are looking for. As always, it's important to remember that the world of investing is a complex one, filled with risks and rewards. While the story of MULN Automotive stock performance is unfolding before our eyes, it's crucial to approach decisions with care. Before taking any action, ensure that you've conducted thorough research and, if possible, consulted with financial professionals who can provide insights tailored to your circumstances. So, do you think there's still hope for MULN amidst these challenging times? Let us know in the comments section below. And while you're at it, make sure to smash the like and subscribe buttons down below. Additionally, if you want to know more about MULN and MULN stock, I highly recommend watching this terrific video. Just click this video right here and enjoy. Thank you for tuning in, and happy investing.